Good morning and welcome to Monday. I'm Joe Jaquin, CEO of the Patriot Training Group, and I hope your week is off to a good start. Our toll-free number, 800-951-0592, and I can tell you I'm already a really busy morning. Got a lot of things going on. My wife and I, we were out doing some stuff out and about this weekend, and she was attempting to buy some clothes for our boys for getting ready for Christmas, and they like a particular shoe, and I don't know what it is. It's some type of shoe, whatever it is, very common amongst the younger crowd. How's that? And we go into the first store. They don't have any. They said they're out of stock. We go to the next one. They don't have any. They're out of stock. 4 stores later, she finds one that has my older son's size. The other one didn't have it all. One store had a display model and said, that's just a display model. We don't have any others out there. And my wife was attempting anyway, we'll see what happens, to order these things online. We were at a certain clothing retailer, again, popular with the, actually popular with a lot of people, and didn't have any large of anything. Yeah, they had plenty of smalls. 1 or 2 medium, no larges, no extra larges. This thing is, I'm telling you, I've tried to say this for a few weeks now. Most of you, even though you're listening to me and I'm telling you, you have no idea what's in front of us here. This is going to be a really, really interesting next 6 months. We're going to have problems with inventories, prices. Or you think things are expensive now? Wait till you see what happens 6 months from now. I think things are just starting. I think a lot of people are starting to wake up a little bit. I'm driving around town, and we're seeing gas $3.50, $3.60, $3.70, $3.80. Crude oil today broke above 85. Unleaded gas was up another 3 cents this morning. And there's really, again, we've been telling you for about a month now about $200 and all the bets that are happening there. But I hope you're getting prepared. Get that gold and silver put away. We're going to do, you know what? We're going to do today some really heavy hitters in the industry. Say record high gold prices are going to happen in months, not years. Kind of very similar to what Jason's been hinting at. That, hey, this, when the money flows in and we see this, pick the commodity. It doesn't matter. Whether it's beef or crab, whether it's cotton or magnesium or computer chips or this or that or the other, you end up with these huge spikes, and we've got the same situation happening in the gold and silver markets. There's not a lot of inventory. There's not a lot of product available. And once the money flows, all of a sudden, Jason, it seems like it's just like a jackhammer, just boom, and all of a sudden the price just explodes.
Absolutely, Joe. And let me just give you my little weekend scenario. My wife has a restaurant she likes to go to. It's kind of a Chinese, Asian food thing, and she orders this bowl with salmon in it, and ordered it. And then when we went to get it, it's like, oh, wait a minute, sorry, we forgot to tell you, we have no salmon. There was no salmon. We don't know when we'll get it. it's
yeah.
Regular menu item, Joe. No salmon.
It's funny you bring that up. Last week I was telling you about how the guy that owns the restaurant that I'm buddies with, and him and his chef were taking a big highlight or a big Sharpie to menu. Salmon was one of the items.
That's right. That happened here in Colorado.
Just got the black Sharpie. You can't get that. They were even talking about stuff like corned beef. Corned beef, really cheap cut, right? It's not the best cut. Even that, they're like, you know what? They were debating. They had this debate as to whether or not they could keep it on the menu. Hey, we can get it, But, man, we're going to have to, when you raise a price of an item that you've been selling at the same price for years, and all of a sudden you've got to raise it, $2 or $3, right? It wasn't like, hey, we're going to raise it 50 cents. No. Dollars. Yeah, people notice, Jason.
Yes, they do, Joe. And I don't do a lot of eating out, so we notice it right away with eating out. But we buy groceries. We do a lot of cooking at home. We eat at home. It's just a healthier way to eat. And we just can't leave the grocery store without spending more every single time Brooke goes and buys groceries. It's more expensive every time.
I used to liken it to, when my wife and I first got married, like $100, you could pretty much fill the cart. And, it'd be pretty full. Couple $100, right? That cart's, it's overflowing. You may need to get a second one. Now, $100, and you look down at your cart and you're like, there's 3 bags in it. That's it. I mean, it's incredible how quickly things have changed. But unfortunately, I think things are going to get a lot worse before they get better. When we get back, 2 of the biggest names in mining were out over the weekend. Bloomberg did an interview with them talking about where the gold market's at, where the silver markets are at, where prices are headed. That's coming up next. Patriot Radio News Hour. Don't touch that dial. Eight 9510592. I want to say it was over the weekend. Who knows? It could have even been early this morning. But 2 guys that used to run Goldcorp. Goldcorp, one of the largest miners of gold in the world. David Garofalo and Rob McEwen. They sat down with Bloomberg. They started talking about where gold's headed. A lot of things going on in the mining industry, and of course, inflation came up, and they said, "Listen, here's where we're at. Everybody's coming to the realization that the central bank, and really all of these central banks, are wrong when it came to inflation. This isn't a transitory problem. This is a debt problem." And they said that gold's going to be $3,000 an ounce in months, not years. And again, they had a very, I think, common sense approach to this all, because they said, and by the way, it's not stopping at 3,000, but they just want people to be ready. We're talking about months. The reaction tends to be immediate and violent when it happens, right? And again, Jason, this kind of goes along the lines of a lot of these other commodities where the banking desk, the trading desk. So you gotta understand that all of the traders out there, almost by and large, it's really it's almost like in Vegas. If you're at the craps table, you don't bet on the don't pass line, right? You're going to ruin the mojo of the table, so everybody bets with the shooter. Well, same things here. They always bet with the central bank. So prices are always, at least until they're not, very understated, because they want to give this illusion that everything's wonderful. Copper was a great example. All of a sudden, the traders, oh, no, copper's fine. Don't worry. Wait a minute. There's no inventory. And copper just explodes to records. Jason, they're saying that the same thing is getting ready to happen in the gold and silver markets.
I think it's very possible, but I think the biggest enemy of physical gold prices is paper gold. And if you want the Wall Streeters to feel like things are somewhat okay, and if you want them to believe your temporary inflation, you can't have gold and silver doing well. So I think Janet Yellen has been screaming and hollering, Joe, about this stimulus. It's almost like, do it or else. When she speaks about this $3.5 trillion stimulus. I don't know, Joe. Maybe Congress. I was just remembering this back when TARP happened. I forgot about this, but the first time they introduced bailing out the banks, 90% of Congress voted against it. I forgot about that. And then somebody must.
Well, yeah, they went up with the 2-pager, right? That's
correct.
What freaked them all out.
But
right?
then the very next vote, they voted it in, though, Joe. So somebody had a discussion, right? That's what I'm wondering. So your 3,000 gold you're talking about, Joe, there's going to have to be a discussion. I don't think it goes until all parties involved decide that they know where they want things to head, because the stock market has to have weakness.
So again, here's what they're saying, and they're kind of already saying that already happened. They had a meeting, and they were going to hold it all down. It's going to be transitory. And then they started talking about currencies. They started talking about the dollar, kind of what you were referencing last week. Hey, there's these, let's call them third world. Let's call them, whether you're talking about like Venezuela or Lebanon or maybe Syria or Afghanistan, places where, hey, the native currency, if you will, nobody wants. And that used to be where dollars were involved. And now all of a sudden, even in dollars, things are doubling and tripling. And they're saying it's not just dollars. It's all currencies that are buying less than they ever have. And then they started talking about all the developments. And it's really, think about it this way, and I love the way they phrase this. Hey, you shut everything down. And then you gave people more money than they've ever had. Well, what did they do? They started buying things. But people weren't going to work. So the inventories ran down. Now you've opened it back up. People are still getting, up until about a month ago, people were still getting all this money. And now the supply problems are even worse. And they said when they're talking about the gold and the silver markets, they're saying that when this thing goes and the money flows in, it's going to be the same story as everywhere else. Oh my gosh, there's no supply.
Yeah.
Right, and it's going to force this price up. And like they said, they think it's going to be a very quick move. And I think gold tends to do that anyway. When it does hit, it happens really quickly. It doesn't go up, $20 a month for 24 months, right? Usually what we'll see is in a 2 or 3 month period, but this is almost a doubling of the gold price. We'll see what happens, but they started talking about gold demand. They started talking about China. They started talking about India. Then they started talking about what was going on in the gold and silver demand when it comes to people hedging. So that's where you're talking about, what we do, and you're talking about all the mints in the world. All of them with the same story. Record demand, not enough product, right? And, of course, premiums going sky high. They're saying they think, anyway, Jason, in the next several months, we're going to see the same reaction in the gold and silver markets as the paper guys give up on the central bank's transitory argument. And to your point, that remains to be seen.
Right, and once people find out that there is no, things really are not as good as the Fed says it is, when the people actually start to figure it out on a wide scale, then they're going to come running to gold, and there's hardly anything there, Joe. The physical market's already dried up, and so yes, that's where your snapping up of the price absolutely will happen, is when those that fear what's going to happen run to gold, and it's not there to be bought.
Yeah, and that's going to be a situation where I think it's going to catch a lot of people off guard. and I think that drives the price even higher. The people that are what I'll say the regulars in the gold industry, the regulars in the silver industry, they've kind of known that supplies have been really tight here for the last couple of years. When you get that next wave of people that they normally don't, wait, what do you mean there's not that? What do you mean you don't have all the 20s? It's kind of like I was talking about at the store with my wife. Well, they got smalls, right? But they don't have any larges. They don't have any extra larges. And all of a sudden, a lot of these traders are going to be like, holy smokes here, and drive the price even higher.
Absolutely, Joe. That's supply and demand. What the good thing about commodities is they are absolutely driven by supply and demand in the end. Gold and silver is manipulated because the paper markets sometimes act like there's some different amount out there floating around. But at some point, it comes back to what is actually out there. Just like you said with copper, once the physical's gone, it's gone. You can't go build electric cars if there's no copper, Joe, and so the price goes up.
And copper, that story playing out all day. All morning this morning, copper prices, they spiked to those records. Then they went in like they normally do and put a bunch of rules on the physical markets that said, see, okay, now we're going to fix it. We're going to get it under control. And already today, copper moving higher again today. The laws of supply and demand, they don't end. Last week we talked about magnesium. Right? Without magnesium, you can't make aluminum. Over the weekend, Europe now has come out and said that they are urgently working toward immediate action with the Chinese because 95% of the magnesium purchased comes from China. And they're saying there's going to be tens of thousands, potentially hundreds of thousands of industries affected if China can't make those deliveries, Jason.
Yeah, absolutely, Joe. Once again, supply and demand. I keep saying it, Joe. You have to have quantities that are in let's just say this with oil. Everyone's supposed to have these strategic reserves, right, Joe? But as you were saying the last few weeks, these reserves are going out. They're empty. And I'll tell you right now, someone who's been buying gold and holds it aside, if they're going through economic stress and they're starting to sell their reserve, their savings to make ends meet, as you see that reserve go down, it makes it much, much worse. And so, yeah, Joe, where are they going to get it? And I think we reported about a month ago, China was running out of their copper reserves. They were delving into it. It's just supply and demand.
Supply and demand rules the day. I just think that a lot of people out there are going to be surprised at how fast prices move from here. And it really only has to do with it. You can ignore fundamentals for a while. And again, go back to my craps table analogy. Everyone bets with the shooter. This is what banks and trading houses do. They bet with the central bank. And the central bank, the supply chain problem's going away, and inflation's just transitory. Everything's going to be great. Just wait a few months. Right? Well, we waited a few months. It didn't get better. They came back out. Hey, no. Yeah, okay. It's been a little higher than we thought, but don't worry. Just wait a few months. So everybody waited a few more months. It got even worse. And now they're like, okay, well, maybe it's going to be higher than we thought. And you're starting to see a couple of Fed governors run for cover and say, well, maybe inflation's coming. Right, here comes, taper. We'll see. And, of course, if they taper, gold goes even higher. But again, look at where we are now. It's even worse. Right? There's record amounts of ships off the coast. We know that. Why? Because there are not enough truckers. Period. There's not enough time in the day to unload it all. But now you're seeing, right, you've seen it with cars. There's no new cars available. Dealer lots are empty. We're in the store. You're at the shoe store. They sell shoes. Well, we don't have those. We don't have these. We don't. And what shoes don't they have? The most popular ones, right? The ones everybody wants to buy, they're suddenly out of stock. Another warning today about alcohol. I was telling you, my buddies are like, well, yeah, right now, certain sizes are unavailable, right? You can't get this. You got to buy the bigger one or the smaller one and all of this other stuff. And you start magnifying that, and every time we turn around, it's one thing for copper to be at all-time highs or any other commodity. It's another thing when they say, hey, it's at all-time highs because we don't have any. That's a different problem. All of a sudden now, airplanes can't be finished. Cars can't be finished. Solar panels can't be made, right? Houses can't get completed, right? And all of a sudden you have this horrible domino effect. I don't know where it ends. When we get back, we're going to talk about these rents that the Feds say are so in control. 800-951-0592, Patriot Radio News Hour. Joe Jake with Jason Walker. And this inflation thing, it's not ending. It's getting worse. And again, listen, this is all on the hands of the central bank, period. They control the money supply. This was their genius idea, to flood the world with dollars and then try to act like it wasn't going to be a problem. We got to remember, people forget. A year ago, Jay Powell was telling everybody there wasn't even going to be any inflation. Right? You hear it all about MMT and all this stuff. And, of course, they make all of these adjustments to inflation to lie to us. Because they have to. Right? Could you imagine Social Security had to pay, they're going to pay, almost 6% this year. But if they had to do 16%, how fast the quote-unquote trust fund would have been out of money? But there's a great story over the weekend here in Arizona talking about there was a grandmother, and she lives in this apartment, and her lease is coming due, and they like where they live, and so the grandmother was like, yeah, okay. Went down to the office, and they had the new lease ready, and then she goes, I was just astonished to see the dollar figure. It's a 3-bedroom, 2-bath. I won't say the name of, they actually list the name of the apartment complex. It doesn't matter. The cost was $2,476. That was the old cost. The new cost, $3,158. And if she only wanted to sign a 6-month lease, that was for 12 months. By the way, they won't allow her to sign for more than that. Because you know what they're thinking? Hey, next time you sign, it's going up again. A 6-month lease, $1,000 more, $3,412. She says, I understand there's going to be an increase, maybe $50 or $100, but $800 more a month. And she's like, you know what? I can't afford it. We're going to have to move. And Jason, I think a lot of people are seeing all of these things play out. And this isn't just in Arizona. This is everywhere.
Worldwide.
This isn't prices going up. This is what I'm trying to tell everyone. Prices aren't going up 2 or 3%. Prices aren't going to go up 4 or 5%. When you're talking about, think about this. That was over a 30% increase in the rent. Not 3. Now, the Fed, we just had the highest inflation number for housing yet, Jason, at 3.2%. And we've got articles in our local news saying, hey, apartment prices are up 30%. Right? It's like, that's missing an entire zero. If that was actually ever, now, again, I'll say this. Arizona, we're probably on the higher end of increases. But could you imagine what the inflation number would be if housing was up 30% on the Fed's inflation report? It wouldn't be 15%, Jason. We'd probably be talking about 20-25% total across the board. But this is what's happening. How about this one? I don't know if you saw this one. AutoZone said, oh, by the way, we may have a little problem with sales. And people were like, what? They're like, yeah, well, we're having trouble getting parts for people to fix their vehicles. In other words, from brake pads to batteries to all the other little components that people buy, AutoZone is saying that in some cases they expect things to be out of stock for weeks, Jason.
That doesn't surprise me at all. Used car prices are hitting all-time highs, record highs. And the thing about a used car, they tend to need more parts than new cars. So to keep that old car running, you got to keep buying those parts. And then, of course, manufacturing is coming probably from China. And look at the stress they're having over there.
Right.
You talked about rent. Listen to this. We talked about Evergrande and all this. I won't go deep into it, but listen to this. In September, Goldman Sachs that said the worst case scenario was that the housing would go down 30% in China. It went down 36%. The first 18 days of October, they're saying 63% down year over year, Joe. That's going to affect us completely. I mean, if China implodes, how are we going to get the stuff they make us, Joe?
Yeah, and again, right, people forget. Without China, everything comes to a stop because they are the number one producer of so many key elements in the manufacturing base. Now all of a sudden, there's not enough auto parts on the shelves. Well, how are we going to, what's going to happen to these 18-wheeler trucks if they start breaking down? And all of a sudden, it's like, well, we'll get you back on the road in a month. Oh, you broke that part? Well, that part's not going to be available for another 6 weeks. I mean, it is incredible. Again, this shouldn't be a surprise, but it is a surprise only because, right, they were the guys that do the trading, right, didn't want to live in the real world of supply and demand. They wanted to believe the fairy tale that was being spun by the central bank. And I'm going to tell you right now, this fairy tale ends very, very badly, Jason.
Absolutely, Joe. Absolutely. And not to just, I'm just going to keep going back to it. If China's having problems and everybody's having problems with all of our sectors, it's commodities, it's goods, cars, chips, everything. Whatever China decides is the most important part of their industry, they'll just take their workforce and take it there. So when Joe's kids want shoes, they're not going to make shoes. They got something else that's prioritized. This is why you're going to see all these shortages. We don't produce it here anymore, and now we're going to reap what we've sown, Joe.
Yeah, well, I think this is something setting up because you're right. China's going to make decisions. Okay, we only have this much power. What are we making? What are we not making? And then we're going to have to live with the consequences. Patriot Radio News Hour. We'll be back right after the break. 1-800-951-0592. Gold's up 13, 18.10 on gold this morning. So we're closing in here. Closing in on 1830. And if the guys from Gold Corp are right, are we getting ready to see a big shot up in price? I can almost guarantee prices are shooting up. And again, we've been waiting for the taper. It looks like it's getting we're getting it started a little bit early, but not that early. I mean, we're going to get a taper announcement here in the next week and a half, and then we're going to know for certain, are they going to start it in November or December? But either way, silver up about 13 to 15 cents here, 24.60 on silver. So silver, same thing. I think it's just my opinion, but I think in the first quarter of 2022, I think we're going to see silver crest over that $30 level, and I think the run is on at that point. At that point, I think you're going to see that silver squeeze that a lot of people thought was going to happen last year. I think we're going to see that happen this year, Jason. And I only say that because there's nothing out there. You know, when we look around and we call, and we've been in this business 25 years, anybody who's got anything, nobody wants to sell it. You know what I'm saying? If I have something, it's just like the wholesalers are calling me, wanting me to sell what I've got to them. I'm like, nope, I'll keep what I've got. We've got that happening everywhere, Jason.
Yeah, silver is very likely, like you've said before, if it gets to 30, it could race to 50, and it could happen very quickly. Same as you said with gold. I'll tell you right now, Joe, I don't think we know. I don't know when it's going to go. We could still be stuck here for a month or two. I don't know. Or it could happen this next week. Things should just take off. I used to say on our afternoon show constantly, it's better to be a year early when you're buying gold and silver than 1 day late when things take off.
Yeah, that's the problem, right? Because we don't know. I wish I did. I wish I could tell you, hey, on November 26th, that's the day, right? And it would make it easy. The problem is, as Jason says, we just don't know. You don't know what the next report is going to be. And this is the problem, because right now, every time we turn around, we have another report that just flies right in the face of that story that the central bank was trying to tell everybody. I mean, I'll tell you right now, I'm worried about Wednesday. I have no idea what that crude report is going to be. But let's just say it's what they expect it to be. We could see $90 crude oil by Wednesday.
I think that's very,
I mean,
very
at that
possible.
point, right? At that point, all of a sudden, bam! Right? Oh, boom! Gold just shoots up $50, and then it's on.
Yep.
Right? But we don't know. Right? Wednesday it could come back. It could be wasn't as bad as we thought.
When the lights are going,
right? And now oil's going to be $82 for the rest of the week, and we'll wait to see what the following report says. You know, that type of thing. You just don't know. Right? Is China going to come out and say, "Oh, hey, we just had COVID now is running through all of our ports, or COVID's running through where we manufacture X, Y, or Z, and all of a sudden prices of another commodity shoot through the roof." We just don't know.
It's not if, it's when, right, Joe? It's not if.
That's kind of the problem. Every day it's like, okay, is today the day the shoe drops, right? Is tomorrow the day the shoe drops? I mean, let's face it. They were running on the most idiotic economic theory ever, which was, we can print money. We can just keep printing. It doesn't matter. And we'll have all of these controls. Like at first, the Treasury had $1.8 trillion in its checkbook to try to keep the money from getting out there. Well, guess what? That's gone. Now, overnight, banks and money markets are leaving $1.6 trillion overnight. Well, guess what? That's starting to dissipate, right? Especially with taper. Now they got to start buying that stuff. And all of a sudden, all these promises that they made just turned out to be nonsense. And again, I think this is what we're facing. I think a lot of people, it all, we talk about the 70s. This is going to be way worse than that. I mean, think about what we've got now and with the Fed lying, right? They made all these, hedonistic adjustments, right? Go to John Williams' shadow stats. Hey, if we were keeping track of inflation the way we did in the 70s, I think his last number was 16%. I think that was his last number. By the way, the central bank has done nothing. At least in the 70s, Jason, interest rates, they fluctuated, but they were still at 8, 9, 10% before Paul Volcker took them up to 20. I mean, they were at least trying to stop it. These guys, they're not even trying to stop it. Which just tells you what Jason says all along, right? Jason, this is what they want.
Right. You said on Wednesday you're wondering where the oil price is going to be. It's kind of funny. There's something else you could talk about the 70s, but with the second largest economy in the world can't keep the lights on, that's a sure indication that energy prices are going up. And it's funny because in the 70s, what were they having on the East Coast there in New York? They were having those rolling brownouts. Remember that?
Yep.
Energy problems.
Exactly right.
How does energy prices go down when the second largest economy in the world can't even keep the lights on, Joe?
800-951-0592. Patriot Radio News Hour, final segment coming up. Final segment here on this Monday. Jason and I were going to switch over to the half-empty cup of Joe show coming up next. Jason, who's our guest?
Ron Weinberg. He's not in the building yet, but he's our Republican from Larimer County that wants to change the way that normal politics are happening and wants to make changes from the grassroots local level. And
local level. Yeah. It's so important. That's coming up next. But I don't have that many. We've been having supply issues with this, but I've got 30 $10 gold pieces today. They're at 1,075. 1,075 on $10 Liberties, 1866 to 1907 at 800-951-0592. Gold at the highs of the day here, just over $1,810 this morning. Silver prices, silver supply is just really, really tight right now. Silver's up another 18 cents now, 24.60 on the silver markets. The Dow mixed today. The Dow just turned positive, so the Dow up about 60 points on, I don't know, who knows, Apple, Facebook, Amazon, Walmart, one of the big ones. But Jason, they're saying that they may finally have a deal, possibly, with Kristen Sinema and Joe Manchin. The plan now, about $2 trillion, and they're going to pay for it, allegedly, through unrealized stock gains. At least that's what appears to be gaining here over the weekend. They're not going to raise taxes on the corporations. Instead, they're going to tax, it looks like, unrealized stock profit gains. And that's wow. I don't even know what to say to that one. But again, this is, to try to affect the 1,000 or so billionaires that we've got, Jason.
Sounds like they want to push stocks higher is what it sounds like. Doesn't sound like
well,
that.
I would think that's going to have the opposite effect. Wait a minute, I didn't even sell yet, but you want me to pay tax on it?
Yeah, well, but for the government to get its piece, doesn't that mean stocks have to stay good? You know, unrealized stock gains, you got to keep those gains high.
I wonder if they can claim unrealized stock losses on the other side.
I wonder if the Fed says, well, we'll just buy more stocks. Go ahead. That's got to be what happens, Joe. I mean, make the stock market go up. And I've said this before, with the inflation going up, the stock market and housing could inch higher, and you could be in a stock crash. You could be in a market crash with things going up a little bit, with inflation going berserk. If inflation's going berserk, everything's crashing, Joe. It's just a weird – we haven't dealt with this in a long time. But if the price of everything goes up 100% and your stock goes up 10%, that's a crash. That absolutely is a crash.
It's just getting more and more interesting, isn't it? I never in a million years. I don't know. We can tax you on unrealized gains. That's. I don't know. I don't know how that works. I mean, I'm just saying. In my opinion, that means Jason says probably go. I think the opposite. These guys will be selling stocks versus buying them. I don't know. I could be wrong. I usually am. Patriot Radio News Hour, 800-951-0592. God bless everybody. We'll be back tomorrow. Half Empty Cup of Joe coming up next.